Halliburton kicks off oil sector earnings on Monday, and several Wall Street analysts say the second quarter could be weak. Bloomberg's Adam Johnson joins us now with a preview. Adam.
Yeah, hi, Deirdre. Four bears, and they're bearish across most of the sector, Deirdre. South Coast, Pierre Connor, everyone looking for weakness. The question is, how bad? And Halliburton should give us a clue. That's what he said this morning. He said, well, I'll tell you what, let me show you something. Baker Hughes, it's the weekly rig count. 916 land rigs were working this week, and that's compared to over 2,000 this same time last year. This means tough going for oil service companies like Halliburton, Wellfleet, and Schlumberger, and a similar story for the offshore drillers like Diamond Offshore, Ensco, Transocean, and Rowan. In fact, Wells Fargo's David Tameron lowers Rowan estimates by 20% on falling day rates, and jackup rigs sit idle. He guesses only about 45% of the Gulf of Mexico rigs are currently under contract, Deirdre. Now, in terms of the integrateds, and we're talking big guys like Chevron, Occidental, Hess, Murphy, Catherine Lucas over at Stewart lowers her estimates by about 5% this year and 10% next year. She cites low nat gas prices and, quote, anemic refining margins. So just how anemic? Well, take a look at the 3-2-1 crack spread. It's based on oil futures, and it approximates a refiner's gross margin. Now, right now it's about 8.5, and Goldman Sachs says this morning this level spells trouble for refiners. They say it's just too low, so analyst Arjun Murthy reiterates his sell on names like Valero, Sun, and Tesoro. In other words, there's plenty of pain in the oil patch, Deirdre.
All right, Adam, so any bright spots? I mean, it's Friday, right? You have to leave us with something.
Now, okay, well, I'm going to give you a little something here. Now, Wells Fargo's David Tameron, and he, by the way, is the guy who's negative on the offshore drillers. He says there's chatter that some of the shale players could actually beat estimates. You know, we've been talking about how nat gas trapped in the shale formations can now be accessed by a process called hydraulic fracking, not to get too technical, but we're told that it lowers the break-even price for exploration to under $4, and as companies like Range Resources, PetroHawk, and Exco report earnings, we'll be looking for whether, in fact, that's true, Deirdre.
Adam, thanks very much.